Good afternoon everyone, this is Connor from Zenfinex, back with a monthly analysis for June. Today I'm going to be going through a gold market and giving a rundown of what is coming up on the fundamentals side and tying this in with the gold prices on the chart. Now at the time of recording this video, gold is hovering around the $1,900 per ounce mark and awaits really key economic data to come out over the next couple of weeks to see if we can move this market up towards the 2000 level or back towards the 1800 level. So from a fundamental standpoint, I've noted down the themes which are tying in a key narrative for what is going on in the economy at the moment. So gold was down a bit this morning as we had some data which most importantly was coming from China really. Their Purchasing Managers Index, or their PMI, was 55.1, which is above the 50 mark expansion. This is their highest level since December 2020. There was also some PMI released in Japan, but this came in at a lower 46.5. And finally, Australia retail sales grew 1.1% month on month in April. But as a whole, it's looking like the global economy is picking up speed. So more importantly, we turn to what's going on in the US and all eyes on the NFP really. And I wanted to turn to some talk coming out of the Federal Reserve. So the Philadelphia Fed President Patrick Harker said yesterday that the US Federal Reserve should start discussing the time frame to slowly but carefully move back on our purchases at the appropriate time, i.e. tapering. This goes hand in hand with the Beige Book survey, which was released as well, which showed that the pace of the US recovery picked up somewhat in the past 2 months. And all of this tension really towards the Federal Reserve means that as traders we really need to see what the data is telling us tomorrow on non-farm payroll day. The data is released at 1:30 PM GMT. We should be looking for even further clues on the strength of the labour market and whether growth will spur inflation that could prompt governments and central banks to reduce stimulus, i.e. tapering, and this is likely to send gold down. Okay, so now looking on the chart, let's have a look to give a balanced view on whether we think the gold market's going up or it's going down. To be honest, what I'm looking at the moment is a market that's starting to lose momentum, maybe starting to correct itself a little bit. You can see that the RSI was in overbought conditions and now we've dropped back in. For you gold buyers out there, to be honest, I'd be looking for potentially a test of the 200-day moving average as a sign to potentially buy the market. You can see that previously, if I scroll back in time, you can see that it has respected this 200-day moving average quite nicely, as you would expect. Where I'm looking for gold to go, if it was to shoot higher, then I really see this as a sensible level for gold to go. Let's say the non-farm payroll is a miss again, which is not impossible, and the jobs report isn't that great and there's no talk about tapering and the Federal Reserve keep their stance, then yeah, I could see this gold market moving up and I could see it hitting 1960, and I've even heard some calls for this market to hit 2000, which would be a very long-term take profit level for me. Moving on to selling opportunities, and if I get rid of these drawings, if I just go on the 4-hour chart, we're actually starting to form, or we have formed, and it would have been a nice signal to sell this head and shoulders pattern here. For anyone that trades these patterns, sometimes when they're really obvious to me, I do like to take a look at them, especially on a higher time frame. This was a sign that the market potentially wanted to go down. You can see that we run up and we actually never ever broke this structure high here. We did correct and then we went to rally again, so we're in a ranging market really, but again failed to create a new high and actually created a lower high. And as it stands at the moment, if I mark this, as it stands on this 4-hour candle, we're actually breaking this structure low. on top of that, breaking through the 50 moving average. So I have to be looking for selling opportunities here from what the price action is telling me. Can we get a close on the 4 hour below this level? If not, we wait. But if we were at some point to close below this structure low, and even I can mark in this one as well, which we haven't closed below yet, then this would be our order block to sell from. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. This would be our order block entry to sell from. Let me get that so you can see it. And you can see that where the level on this 4 hour chart is actually so small, it's only 1905 to 1909, you can see that we could aim for potentially the lows again, which would be a 4 hour trade. We could even aim for this low, which is where I would be looking for, where you can see the market did have, or tried to make a run to the downside and run into this order block. So I'd be looking for this order block now to be our take profit level, which sits actually around 1880, which again, some traders that I've been speaking to, that's the kind of level where they're expecting gold to drop from. A fall below that level would actually break, if I mark that on, a fall below that level would actually invalidate this order block now, and we'd actually start to be looking at a more of a bearish market. You can see that momentum on the RSI is ticking to the downside, and if I just draw the path on for that, so a break below, potentially a retest of an order block which may be sitting around here, and then we can actually start aiming for, I think, where gold could be heading personally, especially if we have a strong job numbers report for this month. I'd be looking at around 1850 as our take profit level. So pretty simple, and it also marries in nicely with this 200 moving average, which will start to come into play as well. So for now, I'm waiting for confirmation. If I have a look on the 1 hour chart, and I can get rid of all these drawings, you can see at the moment we've had quite a few candles of downside. You can see the RSI is starting to be oversold. So you could be looking for a counter trend play. I mean, I don't like the fact that we've had this massive wick here. Probably going to have an order block sitting at these wicks if I go down on a lower time frame. Yeah. So you can see that we can actually refine this level down to probably around here. So as a potential counter trend buying opportunity out from 1880, could even wait for a break of structure on an even lower time frame, or just a break of structure on this top 5 minute time frame is fine. And you could aim for that 1907 level I mentioned on the 4 hour chart, which would be a 3.9 8-hour trade. So for me, we're kind of bouncing in between these levels, but really waiting for what the Federal Reserve are going to say about the NFP tomorrow. Even if we do have a strong job numbers report, they may keep their stance. But I do believe that if we were really to see growth in the labour market, we might start to hear some more talks around tapering. So that is it for today, guys. I hope everyone has enjoyed this video. Please like and subscribe to the channel, and drop your comments in on the comment section. I know gold's going to be a very spoken about subject following the non-farm payroll release tomorrow. I hope everyone has a great day, and I'll catch you all for the next video, which will be next week.